Chipotle stock has sold off 38% since all-time highs back in June 2024, while SPY is up 18% in the same time span. So what is going wrong with Chipotle? Customers are getting tighter and more spend conscious, causing Chipotle to lower guidance for the 2025 full year with flat full year comparable restaurant sales. This is a big blow for Chipotle because they were growing annual revenue year over year in the double digits for the last 4 years, and now the sales are on the brakes. However, with a 38% decline in stock price and flat revenue priced in, this could be a setup for a value play for CMG stock. Chipotle, at time of recording, trades at both a quarterly and yearly price to sales discount. CMG, on average, trades at a 26 quarterly price to sales. Chipotle is currently at 24. Chipotle, on average, trades at an annual price to sales of 6.2. If we take this 6.2 constant multiple and assume flat sales for the full year 2025, then we can expect Chipotle's market cap to be about $70 billion. A $70 billion market cap would equate to $52.48 per share price, which is a $9.10 potential change, or 21%. Revenue and market cap have been correlated for Chipotle stock. This scatter plot shows Chipotle's annual revenue to market cap. There is a positive relationship. This regression line also predicts around a $70 billion market cap, assuming 2025 revenue of $11 billion. We can go even further back in time and see a polynomial regression relationship between revenue and market cap. This model predicts a CMG share price of $64.90, assuming the flat revenue guidance. However, I prefer the conservative $52.48 because CMG stock needs some value penalty for flat revenue. CMG was originally priced with premium because of the fast-paced revenue growth it was experiencing from 2021 to 2024. This flat sales guidance and conscious consumer spending behavior should penalize the share price for the short-medium term until Chipotle can either offer better value to their customers or the economic landscape becomes more favorable for the consumer and therefore Chipotle. From a technical analysis standpoint, I like CMG as a short-term rebound play. From a mean reversion standpoint, CMG is outside the lower band of this regression line spanning 7 years, a potential argument that CMG will return back towards the mean. CMG is currently in a downward channel with a candle gap thanks to the earnings reaction. The upper line matches my valuation of Chipotle based on the price to sales multiple. I would like to see CMG stock fill this gap and reach $52 target before facing upper resistance. I love free cash flow companies, and Chipotle is a positive free cash flow company bringing in $1.5 billion in full year 2024. CMG is trading at both a quarterly and yearly price to free cash flow multiple discount. For CMG to be a long-term holding, CMG will need to prove the integrity of their free cash flow generation would not be affected by the flat revenue guidance. From both a revenue and free cash flow perspective, CMG trades at a discount. However, for good reason, as flat revenue guidance has disappointed investors. Simultaneously, this 38% drop in stock price can serve as a good entry point for a swing trade for aggressive investors or a long-term position if you believe in CMG's future prospects. There are some economic indicators to keep in mind, especially for discretionary spending. We had the longest inverted yield curve. Chipotle management is experiencing slower spending and cautious consumers trying to stretch their dollars. Job market revisions show a sluggish job market, and PPI numbers came in hotter than expected. Discretionary spending, like going out to eat, is one of the first places people will cut their spending. For now, short-term target of $52 for CMG.